Okay, I'm going to debunk 5 myths in crypto, 5 cryptocurrency myths that are so common and seem so true that even the experts are making these mistakes. And these are actually quite dangerous because it could mean the difference between you losing or winning a trade or even missing a top or bottom in the markets. Myth number 1, when the dollar goes up, cryptocurrencies go down. This actually comes from the notion that people get out of high-risk assets such as cryptocurrencies and, of course, stocks or tech stocks when the dollar rises. And this one's actually quite sneaky because it does correlate and make sense from time to time, especially as of late. But the truth is, it's not. The dollar could go up and so can cryptocurrencies, and this has happened in the past. And while right now this is the correlation, it does not mean that it's going to last forever. Now, if you're doing technical and fundamental analysis and you're using this as a confirmation tool or to raise probabilities of your rates, then yes, you can take it into account with your other analysis. But don't use this standalone because you might get wrecked. By the way, real quick, do me a favor and write your own myths, cryptocurrency myths, in the comment section down below. Or if you disagree with any of these that I'm going to give you, please tell me why in the comment section. I would really appreciate that. Myth number 2, the Fed raises interest rates, so cryptocurrencies and high-risk assets go down. This is another myth. It's simply not true. While this has been the case in the last few years because of the macro environment, you have to understand that historically this has not always been the case. And again, while this can be used in your analysis to raise probabilities, it cannot be used as a standalone indicator. Just because interest rates go up does not mean cryptocurrencies will go down. This is just another myth that can get you completely wrecked, and it's actually quite dangerous because it's become the norm. Myth number 3, Bitcoin has to fall 85% in a bear market. No, it doesn't. While 80 and 85% drops have been common in Bitcoin in bear markets, that's not always been the case. Bitcoin has dropped 70% in a bear market, and let's not forget, just because it does something in the past doesn't mean it's going to repeat itself in the future. Yes, price history is great, yes, technical analysis is great, but it's only probability. So again, it should be part of your arsenal of analysis and not a rule of the thumb. This is why you missed the last bottom, because everyone's waiting for 80-85% drop in Bitcoin, and while that's still possible, it might not be the case. Number 4, Bitcoin is correlated to stocks and or gold. First of all, straight off the bat is actually contradictory because stocks and gold usually go in opposite directions at times. But also, just because the stock market is correlated to Bitcoin right now, we can agree to that, there has been times where Bitcoin has decoupled from the stock market. And if you really want to get deep, Bitcoin is supposed to uncorrelate from the stock market at some point. And let me give you another example. They say that gold goes up when there's danger in stock markets, yet whenever we have a major crisis, both stock markets and gold go down. It's just that gold will go back up and over time will be more stable. Bitcoin can and has outperformed both the last 13, 14 years, more or less. And while that doesn't mean it's going to do that in the future, it does mean that it has been and will be uncorrelated again. And myth number 5, Bitcoin prices are news dependent. Everyone's looking at the news to see what Bitcoin's gonna do. This is complete horseshit. Listen, there's news for the masses and news for the classes. You will never get the news for the classes. You will only get the news for the masses after the event takes place. They will use that news to justify the moves of stock markets, cryptocurrencies, and so on. Let me put it another way. If you're in a bear market, bearish news will make the price go down. Bullish news, guess what? The price still will go down. If you're in a bull market and you have bad news, the price will go up. If you have good news, it will amplify the move towards the upside. And usually, if you look at charts, the move will happen before the news. Look, at best, news can temporarily move the price in certain directions if enough panic or greed gets involved. But generally speaking, news does not control prices. Learn technical analysis. In other words, show me the charts, and I'll tell you the news. Like this video, subscribe down below for more videos like this one, and I will see you in the next one.